Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Home Depot. Now, is Home Depot still in a buying opportunity post-pandemic? Well, let's find out together. I'm going to go over a summary of the company, its product offering, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. Now, if you sign up today and deposit any amount, you can get 2 free stocks by using my referral link in my description down below. So everybody knows what Home Depot is, most of us, by the way, who's living on the planet Earth. You know, it's a home improvement retailer. I've been in there like once a week or twice a week for the past 5 months. Now, it offers an assortment of building materials, home improvement products, lawn and garden products, decor products, and facilities maintenance, repair, and operations products. They also provide a number of services, including home improvement installation services and tool and equipment rental that I've used recently. Now, it operates approximately 2,296 Home Depot stores, and it's located throughout the United States, Puerto Rico, the territories, the U.S. Virgin Islands, and Guam, and Canada and Mexico. Now, it serves 2 primary customer groups. Now, the do-it-yourselfer, the DIYer, which is me, and professional customers, the pros. I'm just the amateur here. I'm not one of those pros. Now, the DIY customers include homeowners who purchase products and complete their own projects and installations. Now, the pros are primarily professional renovators, remodelers, general contractors, handyman, property managers, building service contractors, and specialty tradesmen such as electricians, plumbers, and painters. I see a lot of them in there all the time getting materials. So let's look at some of the major news that has hit the wires today. Now, the biggest news of the day is Home Depot is that it beat Q3 estimates for earnings and revenues. Now, I have to say most of us could have predicted that one, but some might have been like, oh, well, is the supply chain shortage, affecting them? Well, I'll get into that in a little bit. The same store sales climbed 6.1% in this quarter, beating the street account estimates of 2.2%. That's a whopping 4% increase over their estimates. Now, consumers were spending more when they visited, raising the average ticket by 12.9% to $82.38. Now, usually I go to Home Depot and I only get a few things here and there, but I've noticed that recently in the past 6 months when I go, I try to go not as much and I try to get as a lot of stuff during each trip. So I'm not spending too much money on gas because gas prices are, with that inflation, it's definitely hit everywhere. And we need to produce more. So now strong demand is carrying over into the next quarter and fourth quarter as the retail readies for the holiday season. Now let's look at some of the fundamentals of this company right now. Now, the stock jumped up in the trading today and reached a level of $392.78 a share. Now, current market capitalization is roughly around $414 billion. Now, the main reason for this push-up was that Home Depot did crush its Q3 earnings estimates with a diluted net earnings that increased 23.3% over a year ago period, and revenue jumped up almost 10%. Now, the revenues for 2022 should be approximately $146.52 billion with positive earnings of $15.51 billion. Now, the projected revenues by 2024 should be approximately $153.78 billion with positive earnings of $16.25 billion. Now, these projections take in consideration the housing boom post-pandemic, but they're very extremely conservative. I want to repeat that. These are conservative estimates on where their revenues and earnings will be. Now, earnings are forecasted by the analyst to only grow about 3.62% per year. Now, earnings in the past have grown 13% per year over the past 5 years. So the projected earnings and revenue growth is not going to be significant by the analyst projections. Now, those estimates are a consensus of all the analysts, but I feel they're underestimating Home Depot's potential like they underestimated Q3, but I will get into that later. Now, looking at the current valuation analysis, because Home Depot is in the specialty retail industry and has positive earnings, the price to earnings growth, the price to earnings, and the price to book ratios are the most appropriate valuation measures. Now, the price to sales ratio is less instructive than the price to earnings growth. The price to earnings, since the company has positive earnings. Now, therefore, Home Depot seems highly valued right now with the highest price to earnings growth ratio value in the specialty retail industry of 2.46 times. Now, however, their price to earnings ratio is only 26.1 times, above the industry median of 12.49 times. But if you compare that valuation with its direct competitor Lowe's, we're right on the money, so to speak. Now, looking at the profitability analysis, now Home Depot is one of the more profitable companies in the specialty retail industry with a net margin of about 10.55%. Now, its net margin and operating margins are both among the strongest of any of its peers, while its gross margin is in line with the industry median. Now, looking at the growth rates analysis of those analysts out there, looking at this, now the earnings growth at Home Depot outpaced revenue growth over the trailing past 12 months. Yes, they have. Now, this is a trend that is not sustainable if profits are continue to grow at this rate. Additionally, the average company in the specialty retail industry was able to grow earnings at a faster rate than Home Depot. But I am not too worried about this because my future projections have revenues and earnings growing at a better rate than what they're projecting. Now, looking at the financial strength analysis on its books, although it's reduced its percentage of debt used in its capital structure this year, Home Depot has a debt to total capital ratio of about 94.59% and is among the most highly leveraged companies in the specialty retail industry. Now, given that the company's operating profits are about 20.73 times greater than the interest payments, there should be little difficulty in repaying its debt. Now, it does have a high debt level. Now, we also have to look at the short-term assets and long-term liabilities. So the short-term assets of $28 billion do exceed its short-term liabilities of $26.7 billion, but they do not cover its long-term liabilities of $42 billion. But Home Depot's debt is well covered by operating cash flow of 42.2%. And Home Depot's interest payments on its debts are well covered by EBIT, which is earnings before interest and taxes, of 17.1 times coverage. So it is important to note that Home Depot pays a dividend of around 1.78%. Now, these dividends per share have been stable in the past 10 years and have even increased over that 10-year period. Now, Home Depot's dividends in 3 years are forecasted to be well covered by earnings of around about a 48.4% payout ratio. Now, there has been significant insider selling over the past 3 months, but not too significant, I would say. So let me bring it back over here. So what do the analysts say about this one, right? Well, the analyst consensus is a moderate buy with a 12-month price target of $375 a share, with a high of $420 a share and a low of $323 a share. And that's taking consideration their low rate of growth over the next couple years of only 3%. So that kind of makes sense. Now, going over a few of the analyst reports that I could find, the New Constructs Fundamental Research Report that looks at this current moment in time, do not recommend investors buy Home Depot, and they have a neutral rating because that means that the stock's upside potential in their heads is about equal to its downside risk. Now, when I looked at the Street Ratings report, they have a buy recommendation on Home Depot right now. Now, this is based on their convergence of positive investment measures, which should help this stock outperform the majority of stocks that they rate. Now, they said that the company's strengths can be seen in multiple of areas, such as notably the return on equity, revenue growth, solid stock performance, growth in earnings per share, and increase in net income. Now, they feel that its strengths outweigh the fact that the company has had generally high debt management risk by most measures that they evaluated. Yes, I completely agree with the Street Ratings, and yes, the high debt management risk is there, but I don't see them screwing that one up anytime soon. So I don't really have any too much worries there, and they're kind of covered on that. Now, the Ford Equity Research Report does have a hold recommendation on Home Depot. Now, this is a result of their systematic analysis on the 3 basic characteristics that they look at. They specifically look at the earnings strength, relative valuation, and recent stock price movements. Now, the company has managed to produce neutral trend in earnings per share over the past 5 quarters. And while recent estimates for the company have been raised by the analysts, now Home Depot has posted better than expected results. Now, based on the operating earnings yield, the company is about fairly valued when compared to all the companies that they cover. Now, the share price changes over the past year indicates that Home Depot will perform poorly over the near term. Now, it seems like these analyst neutral ratings tells me that these guys are worried as cats, afraid to stick their necks out there post-pandemic apocalyptic world and have the vision of good things to come. They need to have that vision. So on my buy, hold, or sell recommendation on Home Depot, here are my thoughts. So first, we have to look at Home Depot's current strategy and market conditions. Now, in regards to their strategy, they're increasing their business with professional contractors and home builders right now. You have to remember back in 2020, when they did acquire HD Supply, which is the supplier of maintenance, repair, and operations products. Now, Home Depot also recently relaunched its loyalty program for professionals, drawing more traffic to its mobile app, all in the hopes of convincing them to shop at Home Depot for all of their jobs, which I think is a really good, smart idea. So if one guy says, I go to Home Depot for these products and I go over here for these, well, Home Depot wants just to take all those products and wrap them in one store and then give you loyalty points when you buy all that stuff, so you don't have to worry about what's my point structure at different organizations, and I get the most bang for my buck and I only have to make one trip instead of 5. So they're also optimizing their space with without sacrificing the shopping experience. Every time I walk into Lowe's, they're really like every season, they really like know exactly how to put everything, and you don't feel all scrunched up, walking through the aisles. You actually can walk through them. So second, we have to look at the market conditions going into the future. Now, a strong housing market has helped Home Depot, and I do not see a cool down projected anytime soon right now. Now, Home Depot's own executives told analysts recently that their professionals are still working through backlogs of projects as consumers feel comfortable having electricians, plumbers, contractors back in their homes again. Now, Home Depot will also focus on offering deals across a longer time period instead of just a Black Friday deal. So expect the Home Depot's deals will run from here all the way towards Christmas. Now, you're probably wondering, yeah, this is all great and all, but what about the supply chain crisis going on right now? And how is that exactly affecting Home Depot? Well, Home Depot's CEO, Craig Menear, told analysts recently that he has received most of its goods slated for the 4th quarter. Now, however, roughly 95 ships outside the Los Angeles ports of Long Beach and Los Angeles are still waiting to be unloaded right now. Executives did say that they weren't very concerned about the supply chain delays. If I have to say they're not concerned, neither am I. I always said it's not going to hurt the big guys because it's only the small guys that get hurt, that have the small margins, that can't be out there and spending more money to get the ships in that they need. Now, that being said, the big question for all of us investors right now is, can they keep beating the street's estimates for revenues and earnings in the future? Now, my fundamentals discussed were based on prior analyst predictions of growth, but at a slower pace than previous years. I think the analysts are kind of wrong with this one about the slower growth rate predictions of Home Depot. And I foresee a growth rate of around 5 to 8% per year in revenues and earnings. So based on all of that, I'm a long-term bull on Home Depot and put a price target of $415 a share over the next 12 months. Now, I would buy in on the next profit take and dip over the next couple of days, around $380 a share, and hold for the long term of 1 to 3 years. Now, looking at the 12-month trailing price to earnings ratio, it is only 26 times compared to 28 for the S&P. But let's talk about the risk to my bull opinion on Home Depot, because that's very important for us to look at as well. The number one is a recession. If the housing market pops and cools off, then there'd be lower spending on home improvement projects. Now, if home prices tank or consumers stop spending, home improvement projects would get pushed to homeowners' back burners, right? And sales they generate for Home Depot would dwindle, and many other bets in the stock market might suffer as well, not just Home Depot, if that were the case. But this one would be easy to spot a mile ahead before the stock of Home Depot turned into a big pile of poo. So keep your eyes on the general market as a whole and the housing market indicators and seeing exactly where that's going. Now, talking about supply chain delays. Now, the company has taken extraordinary steps to ensure its supply chain over the near term. On its most recent conference call, the company executives said they secured container ships for their exclusive use because they're big guys. They can say, okay, this whole ship is for Home Depot, or maybe not the whole ship because it's a huge ship, but all these containers right here, those are Home Depot's containers. Stores remain well stocked. I was in there last weekend. I can attest to that. There's a larger inventory. The dedicated container ships and the largest economies of scale in the retail category will likely help brace Home Depot for whatever disruptive or inflationary pressures it lie ahead. And I agree with that one. With this, I would keep my eye out on what the executives will be saying in the following quarters. It looks like they have the fourth quarter in the bag all the way into the first quarter of 2022. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribe and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.